what is the current state of the housing market here in November in Dallas-Fort Worth? Well, if you've been watching my other videos, you've probably seen a trend, which is that sales prices on average have been going down and days on market have been trending upwards. And we've seen that exact same thing with the data that we got back from October. You can see here when you look at the data from September, we were at a $375,000 average sales price across all of North Texas, and we went down in October to $372,000. Less than a 1% decrease. It almost stayed flat, but that is still a movement downward, which is keeping with the current trend we've been seeing over the past couple of months, really since about May. And then right in line with that, the average days on market here in DFW rose from 20 days back in September to 23 days as of October. Now, what that means is that homes on average are still sitting on the market for about 3 weeks. And depending on your specific zip code, your neighborhood, and your city that you're living in, it may be less, it may be more, or it may be right in line with that average. Now, this information for sellers can be hard to stomach because 6 months ago, you could have sold your home for a very different price than you could right now, because on average, North Texas real estate is down about 7% since it peaked back in May of this year. But here's a really interesting part. If you do look at the data, you'll see that on average, we're still up 11% since this same time last year. And you may be thinking, how can that be? The housing market has seen a decrease over the last 6 months. All the home prices are seeing decreases and price adjustments. Why are we still up 11% since this time last year? And that's because most of the gains we've seen in the housing market this year have come since January into that May time period. And then ever since that point, it's been kind of correcting and going back down. And you're really gonna see that when you look at the graph, because here in June, July, kind of summertime, getting into fall of 2021, North Texas real estate was really stabilizing, which was good to see. But then winter hit, January hit, and then boom, we just skyrocketed up into May, where we went from $340,000 to $400,000 as an average price point. And that was about a 17% price increase in about just 5 months, which is really insane, and it's really unheard of, and it doesn't really happen very often. And so whenever you see something shoot up 17% almost overnight, because 5 months is really overnight in the real estate world, you're gonna see after that period a bit of a stabilizing and a bit of a correction. And that's what we're seeing right now, where we've seen this 7% correction since the start of May. And we've also seen homes recently being sold for about 97% of their original list price, which is meaning that homeowners are taking price cuts when they're getting offers. Not all of these homes are getting multiple offers. They're not getting full price offers with waived appraisals and waived inspections. Actually, buyers are able to go in and get money off of the listing. But overall, what does that mean for the state of the DFW real estate market, and what can we expect throughout the rest of 2022 and looking forward into 2023? Well, here's the interesting thing. Even though we have seen this stabilizing of prices here in DFW, we're actually still expecting and still projected to see an increase of home prices year over year going into 2023. And according to Zillow, they're predicting that by July of 2023, they're going to see the average price point rise by about 4.2%. Now, whether or not that's going to be accurate, who knows? But the fact is that we're still expecting home prices to increase over the next 9 months or so. We're not expecting them to decrease year over year, even though they have decreased over the last 6 months. Now, you may be looking at that and thinking,
but Devin, we're in a recession. Things are just gonna get worse and worse. Look at the stock market and look at the crypto market. Look at everything that's going on in the economy.
Now, I'm not gonna speak to the stock market and the crypto market. Just know that historically speaking, real estate does not fall parallel with the stock market. If you look at the Case-Shiller Housing Index over the last 2, 3, 4, 5 decades, you see some really interesting data. Because if you look at this graph from Case-Shiller, and you can look this up yourself, I didn't just make this up, you're going to see all of these grayed out markers, these vertical lines. These are all recessions that we've seen over the last 50, 60, 70 years. And what you'll notice is that throughout each of these recessions, you're still seeing the housing market increase, even into the 2000s up until 2008, where we saw about a 30 to 40% decrease depending on your area, sometimes as much as 50%. And then you see the most recent recession we had in 2020, where we also saw a real estate increase. So what does this tell you? Well, to me, I look at this graph and I see that over the last several decades, we've had about 9 recessions. Out of those 9 recessions, only one one of those recessions, we saw meaningful real estate depreciation, and that was in 2008. And the reason for that is because 2008 was really caused by the housing market, the lending market, and all of those predatory lending practices going on. So of course, when the lending and the housing market are to blame for everything, the housing market is going to decrease like we saw in 2008. But if you look historically over time, typically real estate prices perform well in a recession. So when you're hearing everyone talk about we're entering a recession and all of this doom and gloom, look back at this chart and realize that just because we're in a recession, that does not mean that real estate prices are going to go down. We still have low inventory. We still have many people every single day moving into North Texas and calling it their new home. We still have big businesses coming to North Texas to make it the new corporate headquarters. And so we still have so many factors that are going to push home prices up over the next 12 months. That doesn't mean that we're going to see 20 to 30% appreciation year over year like we saw since 2020, but we are probably going to get back down to that 4 or 5% appreciation mark. What I've been telling all of my clients is that it's not that we're going to depreciate necessarily in home prices, at least in my opinion, but what we're going to see is that the rate of appreciation is going to slow. And based upon how the housing market has been over the last 18 to 24 months, that reduction of appreciation almost feels like depreciation. Let me know down below if you agree or disagree, and if you're looking to buy or sell a house here in North Texas, send me an email and we'll get in touch.